Okay, we need to talk about gold. Gold price, obviously silver price. Well, I haven't spoken about it on this channel in the past, but we all know what's happened to gold. This is the 1 year chart. One thing that I'll bring to your attention is a different chart, at least a different duration chart. But in the meantime, let's see what the mainstream media does, or what the media does. Media does what they do best, which is content. So the good content is all about the precious metals going up, and that's interesting because people are starting to develop the taste or interest in gold and silver all of a sudden because it's going up. But is it going to continue?
All that glitters, gold rockets to record highs as investors big and small pile in. But can it keep its lustre?
I found that in a bank account, it was just too easy to access, too easy to just spend really quickly.
So I suppose, is it a new gold rush?
Bad news is good news for the gold price, and there's been plenty of it over the course of 2020. That sent the precious metal on a tear to a new record high this week. 40 billion US dollars has been poured into gold-backed exchange-traded funds so far this year, levels never seen before. But as Stephanie Chalmers reports, some people prefer an investment they can hold in their hand.
That's true. Look, a lot of these arguments, and you've been probably would have seen videos where there's a lot of talk about the real money being gold, being silver. If you don't hold it, you don't own it. All those slogans, and they're kind of correct, but you have to go back to the chart that I showed earlier. So this is the chart of 1 year of gold, and looking at it this way, looks like that if you bought it a year ago, that you would have made over 40%. But we have to cast our eyes onto a longer term charts. This is a 2 year, a 5 year chart, and you're still making money here. You're making actually a very good profit. But once we look at the a 10-year chart, we know that towards the end of 2011, the gold rushed up higher. So imagine that, like any other chart, and the benefit of the hindsight tells us that if you bought anywhere around there, you would have been kind of crying and bleeding for about 8, 9 years before it just broke through where you bought it. So it's not all that plain sailing. Okay, before anybody starts making comments that gold is a good insurance and silver. When I say gold and not mention silver, I mean both. They're good insurance, and when you buy an insurance policy, and you would have also heard this argument, and it's a good argument. You don't say, oh, well, I shouldn't have bought the insurance policy last year because I made no claim. Yet the insurance may have cost you 5 or 10% of the value of, say, your car. You don't look at it at the end of the year again and say, oh, well, I shouldn't have spent money on that. It is an insurance against the shocks. It's good to have some physical metal. You can do the ETFs, sure, but having some physical metal is also good. Do you want to invest all your money in it? Definitely not. Do you want to invest all your money in one asset class? No. Yet people do it for the property, as we know. Property seems to be the only thing that will never go down, right? Not really, but we'll find out soon. Yeah, so you don't really want to sink all your money into one asset. So should you buy some? Maybe not at these prices, hey, but maybe they famous last words. But it has run its course. It's probably going to correct here if you want to maybe buy it the next pullback. If you haven't, that could be an option. This is not financial advice. I have bought silver a long, long time ago. So I suppose I'm doing well, but again, it's insurance, and unless it goes something crazy into bubble territory, like doubles, triples, quadruples, which you could, I'm not selling it. But yeah, it's good to have. That's my opinion. But let's see what the mainstream is telling us at the moment, because that's what's going to create the momentum.
Stephanie Chalmers reports some people prefer an investment they can hold in their hand.
Deandra's savings strategy isn't that of a typical uni student.
I found that in a bank account, it was just too easy to access, too easy to just spend really quickly.
Instead, she's putting her hard-earned cash from her part-time job into something kept closer to home, and to avoid blowing it on food or clothes.
Comparing it to gold or silver, an ounce of silver, when I held it, the metal value seemed more worth it to me.
Deandra moderates a Facebook group for gold and silver stackers who buy physical precious metals. She says membership has surged amid the uncertainty of the COVID-19 pandemic. And what's also surged is the price of gold, hitting a record high this week, breaking through $1,970 an ounce and approaching $1,980. Amid the health and economic crisis of the COVID-19 pandemic, investors have turned to gold as a safe haven.
If you look back over, really thousands of years, gold has always been, or has historically been, a store of value, a trusted way to maintain wealth.
Jordan Alicio, the head of investment research at the Perth Mint, says there's a number of factors driving the rally.
We're obviously in an environment where we're seeing very significant fiscal and monetary stimulus being deployed all around the world, and investors are a little nervous about what the long-term consequences of that might be.
While that same central bank stimulus has fueled a recovery on stock markets, the US dollar and bond yields have fallen. Since January, the greenback has lost around 3% against a basket of currencies, while the gold price in US dollars has risen nearly 30%. And with interest rates at record lows around the world, bond yields have tumbled, making gold a more attractive safe haven.
And if you look back when
Look, you're not going to hear any arguments in here that haven't been spoken in the last 10, even 20 years by the gold bugs. And I'm absolutely not against gold or silver because, like I just mentioned, I've got some or plenty. But, it's just something to be wary of and something to have on your radar if you haven't before. You may say, hey, where were you? Why weren't you talking about this when it was low? Well, again, the arguments of uncertainty, the arguments of it being, a store of value for thousands of years, I just don't like those ones because they don't, again, guarantee you that the price of it will go up. Again, if you're buying it for insurance purposes, sure, but do you really want to pay, $2,000 for an ounce only to realize that it's $1,500? I mean, it doesn't feel good, even though we call it the insurance policy, but makes you look silly, and it always will. Every market will make you look silly because, again, you could have bought it for cheaper. So why did you not wait? Well, how long do you wait? How long is a piece of string?
When the GFC hit just over 10 years ago, you could get over 4% putting your money in, for example, a US 10-year government bond. Today, you can barely get sort of 60 or 70 basis points, and once you factor in inflation, it's more like minus 1% is what you're really earning. So in that environment, a lot of people say, well, I'd rather have my money in gold. It's not like it's costing me anything in terms of income foregone or yield foregone.
Gold doesn't create an income, and gold can't replicate itself to generate future growth. So as a value investor, owning gold as a commodity is not something that we would typically do.
While gold doesn't normally fit the bill for value investors, Collins Street Asset Management has been buying select gold stocks to take advantage of the demand for the precious metal as a hedge against broader market volatility.
We find good quality businesses who are able to generate strong margins on their gold producing operations and invest in those.
Right now, you'll get very little return for putting your money in the bank, adding to gold's appeal. Physical gold has been in demand, including by the world's central banks, which hold a collective 35,000 tonnes. But money has also been pouring into gold-backed exchange-traded funds, which saw $40 billion in net inflows in the first half of the year. But Deandra prefers an investment she can hold in her hand.
That's actually very cute. Buying these 1 kilo bars. It is good. It teaches you to save. It teaches you the value. It teaches you when you go and blow $2,000 on an iPhone, how much silver, physical silver that is. Not necessarily gold. It doesn't feel that much, 1 ounce or 2 ounces. But yeah, when you see how much silver you need to hand over for one iPhone, it makes you think. So it's good. The conclusion is not financial advice. Is you got to have some. Should you buy now? Maybe not. If you're thinking, if you just started thinking about it and you haven't bought any before when it was cheaper, well, maybe just wait a little bit until it comes back down and then get into it. It'll definitely over the years be a better investment. Now, from and this is probably, if you've done any research, something you would have heard before, is that if you the gold to silver ratio is like 120, which you can buy 120 ounces of gold or silver for 1 ounce of gold, which is historically very high, which means that either gold is overpriced or silver is undervalued. So the conclusion for that is that you're better off buying silver, and some of the other research tells me that percentage-wise, you're better off buying silver as far as the future gains. Again, if it's insurance, well, it doesn't matter. It's precious metal, so buy either, but silver preferably. But again, a lot of the viewers will probably have known this before I mentioned it.
And it's a way that if you're not too confident with the stock markets or even cryptocurrency, you can at least invest in gold and silver, and you know that you have it in your hand. You haven't just typed in a few digits and your money's just gone.
Something to hold on to in uncertain times.